talk about Whirlpool a little bit, because you did allude to that being down about 20%, and we know the management first, the promoters first sold their stake in February. Thereafter, the stock actually rallied, and then now they want to sell more. What exactly is happening here?
Very interesting developments that are taking place. Earlier this morning, Whirlpool Corp reported their numbers in US hours and extended trading, and they announced that they are going to decrease their stake further in the India entity down to 20%. They do this either by the mid or by the end of this year, is what they have said. Now, at the start of 2024, the parent entity had 75% stake. Then come February, they sold around about 24-25%, brought it down to 51%, and now from 51%, they intend to bring it down to 20%. So there's a further dilution that the promoters are likely to do, which is the parent company. Now, in February last year, they had sold that 24.7% stake in the block deal that was valued at around about 4,000 crore rupees. They sold that stake at an average price of 1,280. So after this 20% fall, the stock is now below the average price of that block deal itself. Now, why did they do so? Well, they said that they are going to use these proceeds to pare down their debt and strengthen the balance sheet. And for this year, in 2025, they intend to bring down debt by a further $700 million, is what Whirlpool Corp said in its earnings release last night. Now, and they had their reasons as well, right? Mark Bitzer, who's the CEO of Whirlpool Corp, he was on CNBC network at the end of the stake sale in February of 2024, and he mentioned that when the parent entity is trading at a 50-time multiple and your own company is trading at a far less valuation, it is an asset arbitrage, and that is what it is. They took some money off the table, but they remain confident of the prospects of the India business going forward, and that valuation point still holds, because even today at the current price, Whirlpool India is trading at a price to earnings multiple of 41 times. And the parent entity is trading at 9.5 times. So it shows the valuation gap that comes in as well. And as you mentioned, the stock price also had rallied quite a bit after the stake was sold. At the closing of February 19, the stock was priced at 1330. By October of last year, the stock was at 2450, and then since then the stock has corrected almost 35 to 40% from those levels. Now, in shareholding terms, well, after the promoter sold its stake, that stake was increased significantly by mutual funds. They held around about 31% stake in March, which is down to 28% at the end of December. FPIs have increased their stake to around 3.5% in December of 23 to around 10% in December of 24. But the retail investors have not, they've chosen to stay away from the stock despite this massive supply that came in to the market as well. So as of now, if the stake sale happens, the minority shareholding, the shareholding will drop to 20%. That will make them a minority shareholder, and as a result of which they will not be able to block any resolutions if the stake falls below 26%. And what they also said is that the stake sale is for a greater autonomy for the India entity, but it will continue to remain a relevant part of the business. But the street does not like it. It's an overhang that has come in now, and as you can see in the price, down in a lower circuit of 20%.
It's an interesting overhang. You know, if they take their stake below that 20% mark, does it make it susceptible to some other activity in terms of, a hostile takeover, etc., or not, is one of the questions that we'll keep an eye out on. But that is for the time when the stake is sold itself. For now, important to know who on the other side is when it comes to Whirlpool buyers. No dearth of demand yet, but at the same time, no dearth of supply in the market too. But speaking